Welcome back to UK Property Info. Otakakai. Before I explain why the UK housing market has finally hit a genuine breaking point, I need to ask you for something that really matters to me personally. If you get any value from this channel, if these videos help you understand what is happening in the property market, please take literally 2 seconds right now and hit that subscribe button. I'm going to be completely honest with you. This channel's not growing as fast as I hoped. I pour hours of research into every single video. I analyse data that most people never see. I try to give you the truth when mainstream media gives you headlines designed to get clicks rather than inform you. But none of that matters if people do not subscribe. The algorithm only promotes channels that people subscribe to. So if you watch my videos but never hit subscribe, YouTube thinks my content is not valuable and stops showing it to others. I am not asking for money. I am not asking you to buy anything. I am just asking you to press one button that costs you absolutely nothing, but helps this channel survive and reach more people who need honest property analysis. Please subscribe right now and hit the notification bell so you never miss an update. Now let me tell you why this time truly is different for the UK housing market. I have been analysing the UK property market for years now. I have seen downturns. I have seen corrections. I have seen moments when commentators declared the market was about to collapse, only to watch it recover stronger than before. So when I tell you that the market has hit a genuine breaking point this time, I need you to understand that I do not say this lightly. I am not trying to create panic. I am not trying to generate clicks with sensational headlines. I am telling you what the data actually shows. And the data shows that multiple critical thresholds have been crossed simultaneously in a way that has never happened before in modern UK housing history. This is not a single problem that the market can adapt to. This is a convergence of crises that has pushed the entire system past its ability to function normally. Let me show you exactly what I mean. The first breaking point is affordability. The average UK house now costs approximately 8.5 times the average salary. To put that in perspective, when the housing market was considered expensive in the early 2000s, the ratio was around 4 times salary. The long-term historical average going back decades was around 3.5 times salary. At 8.5 times salary, we are not just in expensive territory, we are in mathematically impossible territory for the majority of working people. First-time buyers now need an average deposit of over £60,000. The average age of a first-time buyer has risen to 33 years old. In many parts of the country, even 2 professional incomes combined cannot service a mortgage at current interest rates on an average priced property. The market has priced out an entire generation of potential buyers. That is not sustainable. That is a breaking point. I really need to pause here and speak to you directly. If you are still watching and have not subscribed yet, I am genuinely asking why. Is there something about the channel you do not like? Is there something I could do better? I read every single comment and I take feedback seriously. But if you are finding this valuable and just have not got around to subscribing, please do it right now. I cannot stress enough how much every single subscriber matters. When you subscribe, you are not just helping the algorithm. You are telling me that this work is worth continuing. You are giving me a reason to keep spending hours researching and presenting this information. I do this because I believe everyone deserves access to quality property analysis, not just people who can afford expensive advisors. But I need your support to continue. Please hit subscribe and the notification bell right now. It takes 1 second. Now let me continue with the other breaking points facing the market. The second breaking point is transaction volume. Property transactions have fallen by approximately 30% compared to normal levels. To understand why this matters, you need to understand that the property market is a chain. Every sale depends on other sales. When transactions fall this dramatically, the entire chain seizes up. Properties sit on the market for months. Sellers cannot find buyers. Buyers cannot sell their existing homes. Estate agents are closing branches. Conveyancing solicitors are making redundancies. Mortgage brokers are struggling to survive. The market has not just slowed down. It has functionally frozen for large segments of the population. Sellers who need to move cannot move. Buyers who want to buy cannot buy. The market mechanism that is supposed to match willing buyers with willing sellers has broken down. The third breaking point is interest rates. For over a decade, the housing market became completely dependent on ultra-low interest rates. When you could borrow at 2% or less, even expensive properties seemed somewhat affordable on a monthly payment basis. The market adapted to cheap money. Prices rose to absorb the cheap borrowing. Everyone got used to a world where mortgages barely cost anything. Then the Bank of England raised rates from near zero to over 5% in the space of 18 months. This was one of the fastest rate-rising cycles in history. For borrowers coming off fixed-rate mortgages, monthly payments are increasing by £300, £400, even £500 or more. That is not a minor adjustment. That is a fundamental change that millions of households cannot absorb without significant lifestyle changes or genuine financial distress. The market that was built on cheap money is now facing expensive money with no mechanism to quickly adjust. The fourth breaking point is supply. While demand has been crushed by affordability and rates, supply has been devastated by a different set of forces. House builders are collapsing at the fastest rate since 2009. Housing starts have fallen by approximately 40%. Approximately 200,000 fewer homes will be built over the next 3 years than was previously projected. At the same time, landlords are exiting the rental market at unprecedented rates. Over 300,000 rental properties have been lost in the past 3 years. New landlords are not entering to replace those leaving. The rental supply pipeline has effectively broken. So we have collapsing buyer demand meeting collapsing property supply. Neither side of the market is functioning properly. I want to stop again and talk about something important. This video represents hours of research and analysis. It represents my genuine attempt to help you understand what is happening in the property market. But I cannot keep doing this if the channel does not grow. I am not a big media company. I am not backed by wealthy investors. I am just someone who cares about property analysis and wants to share it with you. Every time you subscribe, you are casting a vote that says this content matters. Every time you share a video with someone who needs to see it, you are helping build a community of people who actually understand the market. Please, if you have not subscribed yet, do it now. If you have subscribed, please share this video with someone you know who is trying to navigate the property market. Together we can build something valuable. Okay, let me continue explaining why all of these breaking points together create something unprecedented. What makes this moment different from previous downturns is the simultaneous nature of the crisis. In the early 1990s crash, we had high interest rates and a recession, but affordability had not reached today's extremes and the rental market was not under structural pressure. In the 2008 crisis, we had a credit crunch and falling prices, but rates were quickly slashed to near zero, which cushioned the blow. Previous corrections typically featured one or two major problems that policy could address. Today we have affordability at historic extremes. Transaction volumes collapsed, interest rates elevated with limited room for cuts, housing supply in structural decline, rental supply contracting rapidly, and a policy environment that shows no sign of addressing any of these issues effectively. When multiple systems fail simultaneously, the total effect is greater than the sum of its parts. Each broken element makes the others harder to fix. That is why this time is genuinely different. Let me explain what hitting a breaking point actually means in practical terms. It does not necessarily mean an immediate crash, although that remains possible. What it means is that the market can no longer function in the way it has been functioning. The normal mechanisms of adjustment have stopped working. Sellers cannot simply reduce prices enough to attract buyers when buyers cannot get mortgages they can afford even at lower prices. Buyers cannot simply wait for prices to fall when they are paying record rents that prevent them from saving deposits. Landlords cannot simply raise rents to cover costs when tenants are already paying unsustainable percentages of their income. Builders cannot simply build more homes when the economics do not work at any realistic price point. Every participant is trapped. Every normal market response is blocked. That is what a breaking point looks like. The regional dimension of this crisis is important to understand. London and the Southeast were already the most expensive and unaffordable markets. They have seen the sharpest transaction collapses as the gap between asking prices and what buyers can finance has become unbridgeable. But this crisis has now spread nationwide. Cities like Manchester, Birmingham, and Bristol that were previously considered more affordable have seen rapid price appreciation that has pushed them towards similar affordability constraints. Even traditionally cheaper areas in the north and Wales are now seeing the same dynamics: high rates, collapsing transactions, rental shortages, and stalled construction. This is not a London problem anymore. This is a UK-wide breaking point. Before I discuss what happens next and what you should do, I want to make one more personal appeal. Building this channel is genuinely important to me. I believe that access to honest property analysis should not be limited to wealthy people who can afford professional advisors. I believe that ordinary people deserve to understand what is really happening in the market that affects where they live and how much they pay. But I cannot do this alone. I need subscribers who support the channel. I need viewers who engage with the content. I need a community that shares these videos with people who need to see them. If you believe in what this channel is trying to do, please subscribe right now. Please turn on notifications. Please leave a comment telling me your thoughts. Please share this video. Every single action you take helps this channel grow and helps more people access this information. I am genuinely grateful to everyone who supports UK Property Info. You are what makes this possible. So what happens now that the market has hit a breaking point? There are several scenarios depending on how policy responds and how the economy evolves. In the most optimistic scenario, the Bank of England manages to cut rates significantly over the next year or two. Mortgage affordability improves. Transaction volumes gradually recover. Prices stabilise at roughly current levels rather than falling dramatically. This requires inflation to fall faster than expected and the global economic environment to remain stable. It is possible but not guaranteed. In a more pessimistic scenario, rates stay elevated for longer. Transaction volumes remain frozen. Eventually, distressed sellers who cannot avoid moving are forced to accept significant price reductions. Those reduced prices then become the new comparables that drag down valuations across the market. A more significant price correction of 15 to 20% or more plays out over 2 to 3 years. This would ease affordability somewhat, but would cause significant pain for recent buyers and anyone who needs to sell. The rental market faces its own trajectory. The landlord exodus shows no signs of stopping. Supply will continue to contract. Even though rental demand has softened slightly, this reflects tenants being priced out entirely rather than a genuine easing of pressure. When economic conditions improve, rental demand will return to a market with even less supply than before. Rents are likely to remain elevated and continue rising in most areas regardless of what happens to purchase prices. The two markets are increasingly disconnected. You might see house prices fall while rents continue rising. This is one of the unique features of hitting a breaking point where multiple systems are dysfunctional simultaneously. For different participants in the market, the implications vary significantly. If you currently own your home and are not planning to move, the breaking point may not affect you directly in the short term, as long as you can service your mortgage. Your paper value may fluctuate, but unless you need to sell, this is theoretical rather than practical. However, you should stress test your finances for the possibility of higher rates when you remortgage and build a buffer if possible. If you are trying to sell, the breaking point means you need to be extremely realistic about pricing. Properties that are priced accurately for current conditions are selling. Properties that are priced based on what owners want or what neighbours achieved 6 months ago are sitting on the market indefinitely. The gap between achievable prices and aspirational prices has never been wider. If you are trying to buy, the breaking point creates a complex decision. On one hand, reduced competition and motivated sellers mean you may have more negotiating power than buyers have had in years. On the other hand, high mortgage rates mean affordability is still challenging, and there is risk of further price falls if you buy now. There is no universally right answer. It depends on your specific circumstances, your financial resilience, your time horizon, and your personal priorities. I cannot tell you whether to buy or wait. I can tell you that waiting for the perfect moment is usually impossible, because perfect moments are only visible in hindsight. If you find a property that works for you at a price that makes sense with a mortgage you can comfortably afford, that might be the right move regardless of where the overall market goes. For first-time buyers, the breaking point is particularly challenging. You are facing the worst affordability in history. Deposit requirements are enormous, mortgage rates are elevated. The traditional ladder is broken for many. My honest advice is to focus on what you can control. Maximize your savings rate. Consider locations you might have previously dismissed. Look at shared ownership or other schemes if they work mathematically. Consider whether waiting makes sense if you can save faster than house prices are falling. Most importantly, do not compare yourself to previous generations who bought in completely different conditions. The market they entered no longer exists. You have to navigate the market that actually exists today. For landlords, the breaking point is forcing difficult decisions. The economics of many rental properties have become unviable with current interest rates, tax treatment, and regulatory costs. I understand why many are selling. At the same time, those who can weather current conditions may find that reduced competition and rising rents eventually restore viability. This is not a decision anyone else can make for you. It depends on your portfolio, your financing, your personal circumstances, and your appetite for continued challenges. What I can say is that the structural rental shortage is not going away. For landlords who survive this period, the medium-term outlook for rental demand and rental growth remains strong simply because supply will remain constrained. Government policy has been remarkably absent from this crisis. Despite the breaking point being visible in the data for months, there has been no meaningful policy response, no emergency support for struggling homeowners, no reform of policies driving landlords out of the market, no acceleration of planning to boost housing supply, no intervention to stabilise the market. Politicians continue to make promises about housing targets they have no plan to achieve, while implementing policies that actively worsen the crisis. I wish I could tell you that help was coming from Westminster. But based on current evidence, you should plan on the assumption that no meaningful policy intervention will occur. The market will have to find its own floor through painful adjustment rather than supported transition. Looking ahead, my honest assessment is that the UK housing market will remain in this broken state for at least the next 12 to 18 months, and possibly longer. The breaking point is not a single event that resolves quickly. It is a state of dysfunction that persists until conditions change fundamentally. Rates need to fall materially before affordability can recover. Transactions need to recover before supply can recover. Supply needs to recover before prices can stabilise sustainably. Each of these changes takes time and each depends on the others. We are in a prolonged period of market dysfunction with no quick fixes available. Before I wrap up, I want to make one final request, and I want you to understand how sincere this is. I have put hours of work into this analysis. I have tried to give you genuinely useful information that can help you navigate one of the most difficult housing markets in UK history. If this video has been valuable to you, please do 3 things for me right now. First, hit subscribe if you have not already. Second, click the notification bell so you see every video I release. Third, share this video with at least one person you know who is trying to understand the property market. Maybe a friend looking to buy their first home. Maybe a family member worried about their mortgage. Maybe a colleague who invests in property. Share this video with them because they need this information too. These 3 actions cost you nothing, but they make an enormous difference to this channel. I am genuinely trying to build something valuable here. I am trying to give ordinary people access to honest property analysis, but I need your help to do it. Please subscribe, please enable notifications, and please share this video right now. Let me summarise what we have covered today. The UK housing market has hit a genuine breaking point. This is not sensationalism. This is what the data shows. Affordability at 8.5 times salary is at historic extremes. Transaction volumes down 30% mean the market is functionally frozen. Interest rates at 5% plus have destroyed the cheap money foundation the market was built on. Housing supply is in structural decline, with builders collapsing and starts plummeting. Rental supply is contracting as landlords exit with no replacement. These breaking points are occurring simultaneously in a way that has no modern precedent. The market cannot function normally until these issues are addressed. Policy help is not coming. Adjustment will be painful and prolonged. Different participants face different decisions, but everyone needs to understand the reality of what is happening. This time it genuinely is serious. Thank you for watching UK Property Info. Please subscribe right now if you have not already. Hit the notification bell. Leave a comment with your thoughts. Share this video with everyone you know who needs honest property analysis. I am incredibly grateful to every subscriber who supports this channel. Together we are building a community that actually understands the UK property market. I will see you in the next video. Please subscribe.